So, first thing I want to talk about today is the geopolitical tensions and what are those what these type of geopolitical tensions are, what impacts these are having on geopolitical. Sorry, guys. What currency impacts the geopolitical tensions are having on the market, as well as the US dollar strength because of the rates, the liquidity, and as well as the exceptionalism on the data that is being driving. It's been driving some stronger US dollar. At the moment, we're seeing EUR dollar continuing to go down, as well as we are long, on the US dollar, as well as I've mentioned it already. The third topic would be the Europe. So Europe is getting some challenges at the moment, political and economic risks. And fourth but not least, our beloved Australia. So Australia is struggling with the GDP. All right, so the GDP is weakening as well as the AUD. So the GDP is weakening the Australian dollar, and we are seeing some contraction on the gross domestic product in Australia. So that's really not great. As an Australian, I always want my country to do good, but that's not exactly what is happening right now at Australia. So hopefully we can get to some insights, and you guys can make some good trades on AUD. All right. But as usual, just before we go any further, we're going to be looking at the risk disclaimer. So I'm going to mute myself for a minute. You guys go through, and then as soon as 1 minute stops, we're going to go and go to the charts. All right. Let's get to the point. All right. I think everyone could read it. Hopefully, you guys don't have any questions about it, and let's get through. And we call this off. Put this to the side. Perfect. So first thing I want to show is, let's take this off. This one here. I don't think we have this on FinLogics, but let me just double check. Yeah, we don't have that on FinLogics, so let's use trading for this quote. So I don't know if you guys know, but the first topic, as I've mentioned, is geopolitical tensions and the currency, and how this will impact the currency market. So yesterday I'm not too sure how much you guys follow the actual market, but we had some geopolitical landscape happening yesterday on the South Korea. Yes, wow, that's really good, martial law. All right, you guys already know. Interesting. How do you guys know that? That's really, really great. Okay. So yesterday on South Korea, South Korea experienced a brief yet very alarming period of martial law. And this was triggered by a significant political unrest, and including just accept this person, including an attempt to outer coup by the president Yoon Suk Liu. Let me check his name here again. This guy here. This guy here. Could be facing impeachment in coming hours. Here's how it works. So that's one day ago. So I don't have much news again from him. But as far as I know, the parliament quickly. Let me just wait, guys. Someone will spell the. Sorry, guys. So yeah, every time someone makes a good trade, they come here and build this huge thing here in the office. All right. So as I was saying, yesterday, we had this martial law. But anyway, so the parliament quickly overturned it. While the martial law is sign it, the political instability has wrecked investors' confidence. And why? And then you can come to me and ask myself, like, look, why does this matter to Forex market? Right? Well, if you don't know, the South Korea's economy is globally significant. All right. The currency, it's called Korean won. All right. Yeah. So it's the 12th currency most traded in the world. And the country is a key player in the semiconductor supply chain as well. So the initial reaction, as we can see right here on the chart, was a sell off. Okay, we can just get this opposite as well, and then that will be much better for us to see. There you go. So you can see that the initial reaction was a sharp sell-off, as we can see here. But then we've seen some sort of recovery. We come back to this guy here, USD, EURW. Yeah, we've seen some sort of recovery now, back. But from here all the way to here, let's see how much was this move. So this move was 2% move in 2 hours. So pretty much 1% for every hour that market was moving. And now later on, we've seen some recovery, but the Bank of Korea was basically needs to step into to stabilize markets. And they had to do this by injecting liquidity and managing the Forex volatility. All right. So globally, geopolitical unrest often drives investors towards more safe haven currencies, like the US dollar and the Japanese yen, as we all know. And this event reinforces the narrative that in uncertain times, liquidity and instability are prominent and making the dollar a prime choice, right? As we just saw here, okay. And we can see on the DXY we didn't have much things. Yeah, we haven't had any big move here. But as I say, it is a geopolitical instability around the world, right? Especially on South Korea. Okay, so I just thought it would be kind of cool to tell you guys what's going to happen, what's happening around the world, especially in South Korea. Okay. Any questions around this? No? Okay. So moving on now, let's talk about the US dollar strengthening. Let me move on to US dollar index. There we go. So in the overall market, we can see that, yes, in the couple last weeks, the market has been coming down. Yeah. Right. From here all the way to here, the market has been coming down. Yeah, quite a bit. I do believe that we will continue to see an uptrend on the US dollar by next year. I'm not too confident that we will see something happening, like a big move happening tomorrow on the NFP. I don't think we're going to be having something huge happening on the end of the week, until end of this year. Yeah. But most likely when the situation get back to normality next year in the first quarter, that's when we're going to be looking to some moves on the US dollar. So the US dollar is remain the cornerstone of the global markets, as we all know. And there are pretty much 3 key reasons for its strength. The first is the rates, the second is the liquidity, and the third is the exception. So first, the US interest rates. Okay, so let's have a look at what the market is now expecting. Let me send this link on the chat in the CME. So the market is expecting a 25 basis points cut, okay, from the Fed. on the 18th of December. And then right on the 29th of December, on January, the market is expecting another 25. On the 19th, another 25. And on March, sorry, another 25. And then May, a pause. Sorry, is it a pause? Yeah, it's a pause. And then on May, a pause. And then June, pretty much in between pause and cut. And then July, a cut. And then September, a pause. And then October, a pause. And then December, a pause. So I think the next pretty much 4 months would be really important from the Fed, because we're going to have 18th of December, 25 base point cut, 29th of January, a 25 base points cut, and on the 18th of March, another 25 base points cut. Okay, so the next 3 to 4 months would be really important from the FOMC, even with expectations for the Fed to cut later, this month in December. The 1 week US deposit rate stands at 4.6%. Okay, so that's if we compare that to Japan, that is Japan is a 0.11%, or even Switzerland at 0.86%. The higher yields make the dollar much more attractive for asset, for parking your cash in US, right? It's much better if we come here to the trading view again. We can just compare here, right? US 10 years paying 4.19, Japan 10 years paying 107, Euro 10 years paying 250, Australia 10 years paying 423. Okay, so between all of these, I would choose US dollar because the stability, because of everything. All right, so. And we can see, even with these rate predictions for the next 3 to 4 months, we can continue to see that Japan's and Switzerland, they are not that attractive as the US dollar, as the Fed, as the FMC, right? Second is the liquidity. So the dollar dominates the global trade and finance, and basically makes it the most liquid currency. And in times of uncertainty, the liquidity is a lifeline for investors, right? Imagine, it's very uncertain times at the moment. We don't know if Trump's going to implement 100% tax tariffs on countries such as like China, India, Russia, South Africa, Brazil, the BRICS nation, pretty much, or some other emerging markets or whatever. We don't know what he's actually going to do, but we've seen some sort of a move towards that. If BRICS don't do trade on US dollars, then what Trump will do is we'll put 100% tax tariff on those countries. So it's up to them, right? But it's really hard for them to not trade with US dollar. So basically, Trump is trying to protect the US dollar and make the US dollar stronger as ever again. Okay. Now, and then once we have liquidity, Satish say how to check the other central bank's probability of interest rates hike or cut, like CME website for Fed. Well, the CME is just for the Fed, right? We don't have other. But for the RBA, we do have. We don't have for everyone, okay? We don't have for all the central banks for free, right? We have for FMC, CME, for RBA, call it RBA rate tracker. You can see here. I can send it on the link. Okay. You can have as well, I think, the ECB. I don't think you can, but let's check. Yeah, that's the only ones I think we can follow. Yeah, that's the only 2, 3 ones. FMC and RBA. Let me check RB and Z. RBNZ. Right track. Yes. Yeah, it's just those two. Yeah, it's just those two. This one only shows the previous, not the future. Okay. Yeah, you can only follow those two. So the CME for the Fed and the FOMC, and the RBA rate tracker for RBA. So basically on the 21st, sorry, on the 4th of December, 91% is expecting no change for the next one, and 9% is expecting a decrease to 4.10. So pretty much now we are at 4.4, pretty much 4.30, 4.32 now, and is expected to go to 2.5 into May 2026. All right, so that's how you use this tool. All right. Now, if you want to get something paid, then I recommend going to Prime Market Terminal. It's the tool I use and I show you guys always. Okay. Is CME I don't think so. No, because so CME basically is the Chicago Mercantile Exchange, right? So in two sections. Oh, right. Yes, yes, for the security overnight finance rate and the Euro short-term rate. Yes. But that doesn't make you that's not what you want, right? Because that's the fixed rate. So 3.16, that's the fixed, that's what they're paying fixed. Okay. And that's the term structure, how it works. So I don't think it's what you want. So basically the SOFR reflects the cost of borrowing cash overnight collectorized by the US Treasury securities, and the EURUSD represents the overnight borrowing rate for the euro-denominated unsecured transactions for the euro area. So it's different from what you want. No, it basically shows the like it's different things. No. You can get some insights from it, like volume and open interest, forward guidance, sensitivity, cross-currency opportunities, etc. But no. Okay, so going ahead, as I was talking, the third thing about keeping the US dollar very strong is the exceptionalism, right? So the US economy has shown resilience compared to all the major economies on the G10 group. Okay, so we have Australia, as I just say, weakening GDP. We didn't have that on USA. RBNZ just did some good releases on the interest rates, being able to reduce. So that's some good points, but it's very hard. It's not everyone. Okay, so the ISM services data and as well the Geopolitical remarks. I think it was today or it's going to be tomorrow. I haven't checked it yet, but it will be very, very good for us. Okay, it will provide more clue about the Fed policy direction. And while there is no, there is some risk of a softer macro data, the dollar defensive appeal remains very, very strong. So as we look ahead, I think I'm expecting the DXY dollar index to remain well supported, particularly if the geopolitical or economic risks in all the regions will intensify. If those things intensify, then we're going to get the US dollar much, much stronger. Okay. In my opinion. So that's definitely something. If we come back to the US dollar index, we can see that there is maybe a possibility, okay, of something like, let me take this off. So where is the Fibonacci? So let's count this as a break. Okay, let's count this bottom as break. So 1, 2. Oh, sorry, wrong. 1, 2, 3. So we would be looking to target somewhere around here. Okay. or even here. I don't think this is going to be possible. I don't think the US dollar will actually get to this point. All right. I really don't believe on that. Most likely what it can potentially do is, yes, maybe it come back to somewhere here and a continuation up. All right. Breaking the high top at 108,000. Okay. I don't think it can continue to go down. I think it can, yes, pull back a little bit and then continue to go up. All right. That's my opinion. So especially, as I just say, especially if we continue to have some big moves around geopolitical uncertainties. Yeah, that's my opinion. Okay. Okay. Now, moving ahead, the third topic is about the European challenges, political and economic risks. Right. Let's go to euro dollar. This is a daily chart. I want to just show you guys how quick it dropped all the way down to 103. Pretty much 103, right? 103,500. We saw euro dollar going all the way up to 1.12 and then all the way down to 1.03. So that is 10,000 points. So that is the 10 cents, sorry. That is 10 cents, pretty much 10 cents, 9 cents, around 9 cents. And that's more than 6%. All right. Let me just calculate this on the MetaTrader. From here, that is 8% drop. All right. That's an 8% drop. In my opinion is, yes, we will continue to go lower. All right. So Europe is grappling with some, mixed political instability as well as some economic challenges. It is creating headwinds for the euro. That's for sure. So in France, a no confidence motion is threatening the government and potential giving some ripple effect on market stability. So if that actually is successful, if that actually happens, this could result in a caretaker government with limited powers, and this would add some uncertainty to the Eurozone largest economies, okay, like France, like German, like Spain, and etc. So Germany, as I've just touched base on Germany, meanwhile, is we can see some weak economic data from them. PMI is positioned to contraction. We've seen some PMIs contracting. Energy prices are creeping higher, and there's a little relief from trade-off or inflation metrics. All right, we're not looking at that much things. So if this continues to happen, the PMIs continue to go lower, economic data continue to weaken. This pretty much is painting a really big bearish picture for the euro in the short term. All right. And yes, most likely we can even drop another 1% down. That is pretty much 100 pips. Okay. So we can most likely come to 102 until end of this year. That can potentially happen. All right. That's a potential. That's not what's going to happen. I'm not saying it's going to happen. It's just a potential. And if everything continues to, go wrong as it going, maybe not 1.2, but 1.3. Somewhere around here, for sure. Okay. If we continue to break this low and then continue to go lower, most likely we will break this low and then we will get the 103.
It's going to change.
Okay. Yeah. So, the euro pair is showing some consolidation at the moment, as we can see right here. And but we view this as I'm viewing this as a temporary pause rather than a reversal. If we look to seasonal trends, seasonal trends may support the euro into the year end. but underlying risk remains significant. And the ECB president Lagarde, she had a comment commented today, or I think yesterday, or something like that. But markets are pricing again in a cautious 25 basis points rate cut for the month of December. So in summary, in my opinion, euro faces an uphill battle against a stronger dollar, and it's just downhill for euro. Sweets asked, could it go further up a little before continue the downtrend? Well, I think institutions wouldn't let this happen, because if we go above this price, then most likely we will continue to go high and high. But yes, it could. Okay, it can come maybe somewhere around here, and then continue to go low. Okay, in my opinion. What do you think could happen if it breaks out above the box aggressively? Breaks out to each side, like any side? Well, if it breaks up, then we will continue to, I don't see, in terms of technical analysis, I believe that the fundamentals are much more stronger for a weaker euro at the moment than a stronger euro at the moment, because with all the uncertainties and central banks and ECB being much more dovish than the actual Fed, that is the US dollar, I don't believe we could get something as a bullish euro out of nowhere, unless if Lagarde comes and say, look, we're going to be pausing for the whole next year. And as we know, the Fed is going to be cutting for the first quarter. So most likely what could happen then is, yes, a tweak on that. Okay. That's my opinion. Lagarde said that ECB will look to cut rates in future, but can't determine the pace of it. Yes, of course. That's what she always said. Yeah. Lagarde. Well, she always say that they will cut. And that's what the market is actually expecting. Okay. The market is expecting, not a problem switch. The market is expecting I think a full 25 basis points cut until next quarter as well. So it's going to be very slowly but surely from both bases, both central banks, okay, from ECB and from FOMC as well. In my opinion. Okay. Any more questions? No questions? Okay. All right. So now we have a AUD US dollar trade open short, okay, as I've mentioned before. We opened this trade yesterday live with everyone. You know. Perfect. So if you've not looked at the replay from yesterday, have a look, because it's live already on YouTube. Let me send the link on the chat. Let me just grab for everyone here. That's this one. Rates. I've just sent the chat on the chat. You guys can have a look. It's on minute. I think it's the first trade we took was on minute right at the beginning of the video. On minute 15, I think. Yeah, you guys can have a look. It's pretty good. Anyway, so as I was saying, we have a trade. Look at that. That was a beautiful trade. Nearly zero drawdown. So we have a short on there. You know, the Australia latest GDP report, it's pretty much highlighting how significant the challenges are into Australian economy at the moment. So the growth in Q3 was just at 0.3%. And that's below the Reserve Bank of Australia, below the RBA expectations. All right. So the private consumption declined, and we had public spending offered some support, but the overall picture remains very weak. The Australian dollar did react very sharply. It pulled 0.7% against the US dollar, as we can see right here. This big sharp move down here. Okay, that's a 1 hour chart. And the RBA is facing some very significant pressures to lower the rates, you know. But this week, growth alone may not be sufficient to trigger immediate actions from RBA cutting 25 basis points next month. Well, not next month, sorry, this month of December. And as I've showed to everyone already on the RBA rate tracker, 97 or 98% of the people are not expecting, the market participants are not expecting a cut from RBA to 4.10. All right. So it's pretty interesting because I was having a chat with one of my friends that works in a bank here in Australia. And he was like, well, feels like that the population is not feeling this burnout, you know, in terms of economic instability, and prices are to the roof, and all the inflation and all the growth of the country, because they are getting loans as crazy. Okay, even with higher rates. And this actually worries me a little bit, because if we, you know, for those who have studied a little bit of economics, if we let the people believe that there is no inflation in there anymore, then they will continue spending as crazy. And if they continue spending as crazy, there's a problem, because then the inflation won't be the inflation will be unstoppable. The inflation will continue to go higher and higher and higher and higher and higher. Okay, so the RBA has to either do something to raise rates, maybe, okay, to control the spending, or they continue to lend out, but then that's a really big problem. Okay, so I think RBA has really tough times to the next few months, and most likely we will see some sort of very, very bearish moves on the Australian dollar, in my opinion, against Japanese yen as well, and against US dollar as well. Okay, so looking ahead, I think political risks in Australia is a very key trade. It's a very prominent risk that we need to be looking. You know, trade partners as well, global commodity markets trends will further weigh on the Australian dollar. But for now, the currency remains very vulnerable to downside risks, in my opinion, and particularly in a stronger dollar environment. And if more uncertainties, you know, like this is how we basically trade. It's uncertainties around uncertainties that makes the US dollar stronger, Australia dollar weaker, and then we fall. All right. So just say neutral to little dovish. Neutral to little dovish. I think it's more. Oh, you mean the trade, right? Let's open up here very quick. Let me open up for you guys. Let me open here. So DXM strategy. So we took this trade right here. It was 29% short. So we came into this 29% short, and we entered at 64. So now it's running. Okay, the trade is running. Pretty good. Okay. All right. So let's wrap up for today. All right, there's not much to talk about. So let's summarize a few key takeaways. Get these here. So geopolitical events like those that we had yesterday in South Korea, it pretty much highlight to us the need for safe haven assets like the US dollar. And if it continues to happen around not only in South Korea, if we go for any other country, we will continue to have the US dollar stronger. The second topic we've talked about is the US dollar remains a dominant due to high rates, liquidity, as well as economic resilience. And if we continue to see those types of higher rates, hawkish comments from the Fed, as well as liquidity, as always, this will continue to strengthen the US dollar. And we've talked about as well the NFP. So NFP's expectation to have 212,000 for tomorrow. We have as well a 0.3% monthly average hourly earnings, and a 4.3 to 4.2%, so 4.2%, sorry, of unemployment rate. My opinion is that yes, we will have those sort of similar numbers. We can't predict as a point these and point that. No, I don't know. I can't predict that way. So my most believably, I think we will get some sort of fair bullish moves on the US dollar. Okay, we'll be good to short AUDUSD, euro dollar short as well, US dollar JPY maybe short as well. Okay, so those trades are what I'm looking to get. Europe faces very significant challenges, as we know. Political instability, economic slowdown. This is all keeping the euro under pressure, and most likely will continue to keep until end of this year. And of course, Australia with GDP data is pretty much underscoring how the RBA is facing some big challenges on on the lowering the rates, and as well as commodity driven economies are getting lower GDPs. Okay, so guys, hopefully I could help everyone. Have all a great weekend. We'll be enjoying my birthday as well as my half marathon I have on Saturday morning. And yeah, hope everyone enjoys as well the weekend. Thank you so much. I'll see you next week, guys. Bye-bye. Thank you. In advance. Thanks, Sweets. Thanks, man. See you guys. Bye-bye.